U.S. Concrete Inc., ticker USCR, operates in the production of ready-mix concrete. Its operations are segmented into ready-mix concrete and aggregate product segments. USCR's larger segment, ready-mix concrete, generates revenue through focusing on the formulation, preparation, and delivery of ready-mix concrete to construction sites for customers. The aggregate products segment provides crushed stone, sand, and gravel from aggregate facilities. USCR was founded in 1997 and went public 2 years later in May 1999. The company is headquartered in Euless, Texas. USCR's acquisitions, margins, and growth strategies position the company above competitors in order to take advantage of the building materials market in the aftermath of the coronavirus pandemic. Historically low interest and mortgage rates resulting from the pandemic have increased demand in the housing market, leading to an American home buying spree. President Biden's infrastructure bill addresses U.S. highways, roads, and bridges, and is estimated to cost over $1 billion to complete. U.S. Concrete is in a good position to benefit from the infrastructure bill due to its recent acquisition of San Francisco Bay Area concrete plant. This expansion into California is extremely well timed as the state needs the most intensive highway repairs and upgrades. U.S. Concrete has been steadily increasing its supply chain efficiency. The company's strategic acquisition of assets in San Francisco Bay Area were made to expand the company's footprint in California because of its demand for highway infrastructure spending. In May 2020, the California Transportation Commission approved over $17 billion to support over 900 projects outlined in the State Highways and Operation Protection Program. Because of this, the firm is well positioned for an infrastructure bill. U.S. Concrete's aggressive growth strategy and expansion into profitable markets has positioned it ahead of peers to benefit from the likely materials boom resulting from the pandemic. Demand for building materials has increased significantly for both residential and infrastructure uses, with lumber, steel, and concrete prices having collectively risen 13% in the last year. Lastly, USCR has outperformed its industry. U.S. Concrete has significantly outperformed its sector, with share price increasing nearly 60% in 2021, significantly beating the industry average of 18%. An intrinsic value of $86.09 was determined using DCF, price to sales, and EV to EBITDA valuation methods. A 6-year DCF constructed gave USCR an intrinsic value of $121.55. Price to sales multiple valuations was conducted using 2020 total sales and a blended average of price to sales multiple of 17.29, which resulted in an intrinsic value of $70.62. An EV to EBITDA multiple valuation was conducted using 2020 total sales and a blended EV to EBITDA multiple of 8.38, resulting in an intrinsic value of $65.04. By weighing all three models, 34, 33, 33, a price target of $86.09 was reached, resulting in a 35.99% potential upside. Risks to USCR's share price include infrastructure bill funding. While most experts are confident the infrastructure bill will pass, there is a chance Congress could delay or even fail to find sufficient funding, which would unfavorably impact the company's earnings. The second risk is capital expenditure spending cuts. Although the construction market is rebounding, corporations could cut their capex spending if macroeconomic conditions weaken, therefore hurting demand for USCR's products. The third risk is insider sales of shares. Recently, Jeffrey Roberts, a vice president, sold 4,000 shares of USCR stock. Additionally, another officer, Herbert Burton, sold 500 shares in April. Ronnie Pruitt has served as U.S. Concrete Inc.'s president and chief executive officer since the retirement of William Sandbrook as CEO in April 2020. Before then, Pruitt served as senior vice president and chief operating officer since October 2015. John E. Coons has been the senior vice president and chief financial operator since October 2017.